Okay, so today, November 16th, usually I don't timestamp these, but it's our little puppy's 1 year, it's his birthday. So my wife and I are gonna take him, get some treats. And yeah, anyways, I don't know why I shared that with you, but it bought me a couple of seconds to get into what I really wanted to share with you. And that is some of the things that I'm currently seeing here in Alberta. And what's interesting is these are what I would say similar trends to Vancouver, Toronto, Dallas, Phoenix, really hot markets. Um, Alberta is really starting to attract a lot of attention, right? Specifically Calgary, Edmonton, even some of the secondary markets. And I know this because I'm having conversations with brokers on a very frequent basis. And so I think last week I was out for lunch and coffee with probably 5 or 6 different brokers and people that are in the know. And uh, one of the agents made a comment and he said, "Yeah," I said, "Hey, how did that retail property go that you took to market not long ago?" He's like, "Shane, it was crazy." He's like, "We had, I think he said like 25 or 30 offers. The winning bid or the winning buyer, if you will, no conditions, and bought the property essentially, within like I think it was probably like a 3 week close, but no conditions, right? So hard money on day one, and I mean this is the type of thing, and in retail, right? So Alberta market, retail, no conditions. I mean this is stuff that I had seen in Vancouver and Toronto, Dallas for like multifamily, but you're starting to see just a real push, if you will, for investors, I think, to place their money. I think that there's a lot of fear around inflation. I'm not going to get into that because, quite frankly, that's kind of outside of my wheelhouse. I have my own perspective and thoughts on it. But what I thought I would do today is maybe share with you some of the ways that you can still compete in a very competitive market. Because let's face it, I'm not in a position, and I never recommend any of my clients to go in unconditional, right? I mean, it's not practical for new commercial real estate investors. People that can write those kind of big checks and take that kind of risk, because if you find out something after the fact, generally speaking, that money that you put up hard is gone. So I don't like to play that game. So how do I still find deals, and how am I still competitive today? Well, I can tell you that right now I'm seeing anywhere from, I think I probably saw 8 deals last week, of which a couple are interesting, right? I only have so much bandwidth. It's not like I have endless resources and capital and time to be able to do all these deals, but I'm still seeing some really interesting and great opportunities. And yet there are others out there that feel, or they are actually going the other way, which is like, I'm going to put up hard money on day one. So let's talk a little bit about some of the ways that you can compete if you don't have that either risk tolerance, capital, or experience. And the first is, uh, this might get, I don't know how people are going to respond to this, but I'm just going to say it because it's my own experience, and it's what I notice a lot of successful commercial real estate investors do, and that is they don't try to um, go to the big shops and try to get to like the front of the line, if you will, right? Do like there's a place for, when I say the big shops, the CBs, the Colliers, the Cushmans, the JLLs. I mean, I've worked at those big shops and I understand how the game is played. And there's nothing wrong with it. Just understand that as an investor, when it comes down to supply and demand, if there is more demand for less supply, then you're going to be in a very competitive bid situation, and it's going to be difficult to win those offers, right? To win those properties. And so what do? I go the other way. I go to the smaller brokers. I go to, when I say smaller brokers, like the smaller shops, I go to, uh, even residential investors. So last week, I probably met with 3 different investors in the residential side that still kind of dabble in commercial real estate because they still come across opportunities. And They are generally less known, but they still find and drum up great deals. They don't have the databases that the big shops do. And so I will oftentimes see opportunities that no one else is seeing, right? Um, Now, so that is number one. So who is it that you're talking to? Number two is like building relationships. So for probably the past 10 years, I've been planting seeds with a lot of these individuals, right? And even though I did sell commercial real estate, I don't really do that anymore because I've got too much on the go with my own projects. Um, Anybody bringing me an off-market deal, which is really what I like to see, they know that I'm not going to screw them and and go around them, right? Or go direct to the seller, or any of the other ways that brokers oftentimes get taken advantage of. I am very clear, and I don't even have to say it anymore because my reputation. They know that I'm not going to. Right now, if you're new, then you're probably going to at least want to have that conversation just to let brokers know that if they show you an off-market deal, that you're not going to go around them. Okay, that is just so important. Um, Let me see what else I wanted to talk about. So we talked about going to the smaller shops, building those relationships, and the other thing that I would maybe share with you is like, how can you help them? Right? Oftentimes, I think, and I see this very frequently, where a new investor that into the world of commercial real estate, they it's almost like they expect the agent or the broker to either find them incredible deals, to do all the hard work, to to basically like they're putting the needs, if you will, as of an investor on the shoulders of the broker. And I get why they're doing it, because obviously the agent is going to make a very good commission from selling that property. But here's the reality: by doing that, what ends up happening is brokers are they only get paid for deals that close. And so uh, what this is like totally off script here, and it's not like I have a script, but I had some thoughts that I wanted to share, and I wasn't even going to go down this path, I guess. So, but now that I've started, I'm going to just complete the thought, and that is, um, if you are, as an investor, hoping that the commercial broker is going to do all the research and legwork for you, what ends up happening is you start asking a lot of questions, and the broker is busy. They only have so many hours in a day, and they're going to go what I would say to the path of least resistance. And I don't mean that in a negative way. It's just the reality, right? If there's five prospective investors that a broker knows that they could take a deal to, who are they going to show it to first? Are they going to show it to the individual that asks 50 questions in an email, that is never, hasn't toured any of the deals and is looking at properties and is, just creating more work for them? Or are they going to go to the person that says, you know what, I'll meet you in 30 minutes, which is literally what I did yesterday. I drove out, it took me an hour, of driving at least. I went, I looked at the property, I took pictures, and I said, I'm going to get back to you in 24 hours. And I didn't expect the agent. Obviously, I asked him some questions. I don't think that there's anything wrong with that. And I said, send me what you have, right? I'm not creating more work for them. But what I do want to do is let them know that I'm a professional and I'm going to do the work myself, right? Because frankly, if the broker knew all those questions, they would probably be investing themselves, all right? But if they don't know, then it's safe to assume that that is going to be on you. That's going to be on your shoulders. And so I think that especially if you're out of town coming into a new market, spend some time here, go look at the real estate, get a sense as to what is reasonable, right? Just the fact that I went and had lunch with my buddy, I don't want to say his name just because he was sharing some details that I probably shouldn't, which is why I've kind of been vague, if you will, because I want to protect their and respect their privacy. But if you're coming into a new market, and I've got actually one of my coaching clients, he's flying in next week or 2 weeks from now. And, prior to that, my suggestion is to understand, what are the cap rates? What's the price per square foot? What are the rents? Like, come in here with like at least a decent understanding, so that when you start to look at properties, you have reasonable expectations. Nothing worse than going and saying, hey, I want a 6 cap on a, small bay industrial, for example, when the market is really 5.25. That may not sound like a lot, but if you stretch that over $200,000 of NOI, that might be $500,000 to $1 million difference in purchase price, right? And so having those kind of really frequent conversations, really getting in tune with what's going on in the market, and having clarity on what it is that you want, I think is going to be very helpful. The last thing that I want to mention is, and this might be a little controversial, but I'm just going to share this with you. And this isn't self-serving in any way. This is just how I do business myself and what I've noticed in others. So I'll share with you. This is something that I realized as I was working with a group of clients in the past month. Okay, so that's how recent it was. So I sent out an email to my listeners of the podcast and whatnot, and I said, I'm doing a blueprint day, like a commercial real estate investing blueprint. Right, this is what I've only ever done with private clients, but I'm going to do this with a small group of people, and I expected them to be all active investors. One of the ladies was a passive investor, and I was quite curious as to why she came on to the call. And because obviously she's already doing it, she doesn't really need another plan per se. And what I found out, and she didn't say this specifically, but I could tell, and she was really essentially buying access to build a relationship, I think, with me and potentially other people on that call. Right? She explained very clearly what she was looking for, the types of real estate and investments that she did, and so for a very low investment, if you will, she was able to get access to and start to build relationships with 7 or 8 other people, and then anybody else who watches the video afterwards. So if you are going into a new market, look at how you can get access and buy your way in. Because, and when I say buy your way in, it doesn't have to be just with capital. It could be with time, it could be with energy, it could be with connections. But for example, when I go into a new market and I connect with a lawyer, and even if it costs me a couple $100 to sit down with that lawyer, and then I ask him, hey, who should I talk to, for example, with respect to a commercial real estate broker? Who would be a very good lender that I should have lunch with while I'm here? I've paid that lawyer, right? Now they're going to send an email, CC me, for example, and introduce me to 2 or 3 different people. And now that broker is going to, because they have a relationship with the lawyer, this is just one example, they're going to take that email, they're going to put it at a higher priority than if I were to just contact them on LinkedIn or send them a cold email, right? So this is what I mean by buying your way in. This is how you access people and you jump the line. It still takes time to build those relationships. I wouldn't expect just because you had one lunch with a broker that they're going to send you deals, especially off-market deals like this. It just doesn't happen. However, you get your foot in the door, you pay for lunch or whatever it happens to be, and you just start to nurture those relationships. And over time, right, after you plant enough seeds and you meet enough people, hopefully what ends up happening is you start to see deals first, right? You start to see off-market deals. And at a certain point, you grow your portfolio, if you will. So that's what I wanted to share today. Play the long game. Relationships are key in commercial real estate. And I would say stay away from where the herd is going, because it's so competitive that it's very difficult, in my experience, to really find opportunities that are going to make sense. So not to say you can't, but I'm not doing it. So anyways, that's it. I've got to take my puppy for a walk, and have a great week. We'll see you next one.